Welcome back to Trader Wait, aka Trader Sage. We're going to review price action on the ES, the S&P 500 E-mini futures chart, utilizing ICT concepts. I'm going to try to go day by day or one shot, one kill. My sole model is the market maker buy and sell models. And part of that is the Purge and Revert liquidity model, Purge and Revert liquidity grab, and some other elements, right? Well, let's see. This is the 5-minute chart. Whatever over here, this is what it's saying. This is what that same 4-hour time frame levels and price action look like on the 15-minute chart. It's literally all right. So where was that? Like I just been making videos and not submitting them, you know, not opening it up for public consumption. Where we at with it? All right, so let's do this. We start on the 4-hour chart. Let's take everything off. Right. All right, so this is the opening. This is the weekly. This is where Sunday 1800 hours. You can see down here, and so each one of these delineate a start of a new week. You got a consolidation here. We have a stop run here. We have a stop run here. So let's just highlight that. Because technically this ran that low, right? Ran that low. So we can get into the bearish fair value gap, aka is inverted now. You can do that way back here if you want. This was the dominant price range from here to here. From here to here was until this stop run happened, and it became from here to here, dominant price range for this week. There's another price range from here to here, right? This is, and then there's another one. There's another one from here to here, right? So these are the 3 price ranges on the 4-hour chart that I would be paying attention to for the week, right? So I'm gonna delete that because all of these numbers is kind of weird. All right, so boom, right? We have this dominant price range. This is in a premium. We have a balanced price range here. We have a bullish fair value gap. We have a SIBI, a sell side imbalance, buy side inefficiency here. They overlap. So this is the justification for that. This short. And all right, so that's that. And then we went down to a discount below 50%, below equilibrium. And we can see now we kind of trading around that equilibrium mark right here. I'll just say EQ, man, because equilibrium, you can take that off now. All right, so all right, 4-hour balanced price range, technically DPR. 4 hour. That's gonna bother me. 4 hour BPR. There you go. And we have this level that was rated. We have a retest. Pull back into equilibrium. Pull back, took out this sell side. Also retested this as well. So this right here is a previous week's low. This is also a previous week's low. So this is a big time level, right? So it's definitely a key level. The previous week's low. So I wrote high, right? Previous week's low. This is also week's low. It's not as significant, but we just write in what we see, and I'm sure this level is also a previous week's low as well. So we ran the low. This ran 2 key levels and pulled up with, this is a huge momentum run, right? Impulse leg until we ran back into a premium, right? Above equilibrium. Premium, pull back down into discount. This ran only 1 previous week's low, pushed back up. So we got a purge of the previous week's low. Likewise, we have a purge of the previous week's low here. You don't have a revert until, I would say, here. And this would be that entry if you missed all of this on this time frame, at least. Or you can say this is the break, and then this is the pullback. This is the revert. So with that, day of the purge. So the day of the purge here, count back 1, 2, 3. So ideally we were targeting here, but we had this balanced price range to block that. So we have a run on stops here with this candle. We have a market structure shift with this break, a retrace back into, again, this balanced price range, short into a discount. This bullish fair value gap here. That's here. Push back up above equilibrium. Pull back down. Take out the previous week's low, right? So you think about it, this week's opening price should be somewhere around here. Right, should be here. Previous week's opening is here. Weekly opening, right? So weekly open, you have a pull up here. We have manipulation by Tuesday, 10 o'clock, London close, kill zone, between 10 and 12. So this created the low of the week. And then the high of the week was on Friday. We have we have the run on stops, the purge below the previous week's low here. We have you can count this as a run or market structure shift. Yeah, there's a fair value gap here, which makes it, for me, more high probability. Right, so it ran this high. So that would be your market structure shift above that, above this black line. Market structure shift was here. Pull back, retesting the weekly open. And we have internal range, external range, back to internal range, same weekly open. If you don't like that, then there's a tiny little fair value gap here we can use. Right, so that's actually good. Let's say 4 hour fair value gap. Like all the work happens here. 4 hour to the bearish fair value gap. technically an inverted fair value gap that's been violated and violated here. But we'll see. We'll see what happens here. Let's just label that now. So when price returns back to here, we want to see what happens, right? Inverted fair value gap, bullish fair value gap here after the market structure shift here. All right, don't flip on me, son. Don't switch on me, son. All right, so we have that. Purge, market structure shift. With this is the break. And this is the pullback here. You got a internal range, external range taking out these relative equal highs. Trading into this imbalance. This is a violated bullish fair value gap. It's low key to some degree a balanced price range, at least to here. You want to pull that over, you can do that, but all right. And it's gonna label that. So let's say 4 hour. Let's just call it an inverted bullish fair value gap. All right, and it's also above equilibrium. So this is your premium. So premium, discount, back to premium. And in order for price to continue going higher, because this is also a breaker as well. High, low, higher, high. So we want to see price hold above at least the midway point here. But this is also, I could say it's a stop run. And this is a consolidation here. So we have the purge, trading above this consolidation, pull back into that consolidation. And now we're above this consolidation. And we have an original consolidation here. And we have relative equal highs up here. So we got two running theories, a pullback into here to attempt to run up here. I don't know if there's any news this week, or what type of news. And it's still last week's stuff. Motion. Well, we'll see. Stand by one. All right, so we don't have, I wouldn't say there's any unemployment on Thursday, 8:30, and PPI on Friday. So I guess the question is, it has here 9 p.m. Trump speaks at 9 p.m. on Tuesday. But unless it's some other event, then there's no catalyst right now. Necessarily, there's no catalyst to push us up here yet. So maybe we pull down here and go. Pull down here and then go. Let's see how that goes. But right now, it's not as high probability setup because it's prancing around the equilibrium, the midway point, right? So it's kind of like, yes, it's in the premium, but it's also kind of like what Is it going to go to premium? Is it going to stay in premium, or is it going to go to discount? Right. Back to discount. What we doing? All right. So what else we got going on here? I think that's it. Tuesday, the low of the week. High of the week, Wednesday at 10 o'clock. Both of them, the low of the week. And so far, this stage, prior to the pullback, 10 o'clock on Wednesday. And this is Friday, 10 o'clock, creating the high of the week. So, whatever, whatever. All right, so boom, right? 4 hour to the 15-minute for me. And so what we had here, above this high here would have been the market structure shift. And you can see here, technically, this was a market structure shift on this time frame, but it still came down and ran sell side again. And we can argue there's a 1, 2, 3 drives reversal pattern here as well. So this ran here, quick stop run, pull back inside of this 4 hour reverted fair value gap. Pull back inside. And this was news here. Moderate news. So now we still have to think about time and price. So what time is this? 7:45. We want to look at 8:30. 8:30. 8:45. So around here, 8:30, right? We got a stop run here at this time frame. This is also, there's a silver bullet between 7 and 8:30. So here you go, your stop run, your purge, your market structure shift. But also this violated bullish fair value gap here. And then price up, pulls back here. And then 9:30 manipulation. So we have the Asia low here, we have the Asia high. It reached up into it, but they didn't take it out, pull back, because we have this here. So balance price range here as well on the 15-minute, and then take off, right? Retest this weekly open. I'm gonna take that off now. Take this off too, because this indicator here is documenting the weekly open and the previous week's low. It's also documenting the Asia low and Asia high, previous day's high and previous day's low. And these are documenting the news. And if you were like not sure of your fair value gaps, you can make this indicator highlight specific fair value gaps, including the ones on this time frame. I can see those. I can see these too. This is not as relevant to me. It's not every gap is a fair value gap. Let's just start there, right? Not every gap is a fair value gap. What do we got? All right, so have the purge, have the open here, run up, fake move. All right. So this is the turtle soup above here. You have a market structure shift to retrace into this bearish fair value gap. Sure, this is a completion of a sell model, with this being smart money reversal, and this is first stage distribution here, second stage, and then completion. You can say if you consider this to be the original consolidation or this as the original consolidation, then that would make sense. So if you consider this, then you would get out here, and then you would have missed this loose change kind of. It's a lot of drawback, a lot of drawdown here. So it so yeah. Anyway, that's one model here or here. But technically it goes all the way up here though. So this model, we use this one here. It didn't complete that one into here because this would be the smart money reversal to complete this original consolidation. I think it's back here actually. Yeah. So that completes this right here, this buy model. And this creates another buy model is complete, another sell model below these, taking out the previous day's low, and another completion here. It's interesting though. Anyway, let me see if I can make that sound will look better. All right, so that's one, right? This would be one. If you miss that one, then you can just use this one. Right? And then this is a purge, as we already discussed. So that would be your smart money reversal. And then this would be your original consolidation. It's like stuck right here, right? This could be, you can say that's a completion or this a completion. And so you have this. This is the buy side of the curve. We already discussed that. Now we have a smart money reversal here. And so this would be the buy side of this curve. And then this would be the sell side of that curve. Right? Sell side. And then we have a little tiny one here again. Right. Above here into this imbalance, drops down. And then you look at the NQ Friday at 9:15. That kind of justifies, like, this is a divergence between ES and NQ. So you may say, oh, it's very shallow here. It is, but it's still a complete model. And we have that one. Then we have count this one, and this from here to here. And then this would be a completion of another. Is this a sell model here? Then it's the buy model. We have multiple market maker buy and sell models here, utilizing the same. Oh, I didn't explain this. Sorry, that was on the chart. It should have been off the chart, but let me explain what this is. I was looking at. Why did it still show up? That's weird. It wasn't there before, right? Anyway, this, I was looking at this swing low. Like, yo, how can I have caught this run here? on a 4-hour chart. Like, how could I know this was gonna stop here? Using my way, like how I trade. There's other elements there to say, okay, I see it, but I use the wick here, divided into quarters. And so you see, this is a top quadrant of this wick here. Tuesday the 17th at 6 a.m. 4-hour candle. So drop back down to 15-minute chart, and that would be here. So you can see, like, reclaim that right here. But it's also on this time frame, it's a bullish fair value gap, so it's less worries. But how do you spot that on the 4-hour chart? So this is what that is, and you can see, like, once price dropped below, absorption here, consolidated here, broke above it, is this sweeping below there now. So more conviction that price wants to go higher. Again, it's swept below that first quarter again, including the weekly open, and then proceeded higher. I don't know if did I confuse you or waste your time? I apologize if that's the case, but hopefully spark some imagination, some creativity, some type of thought. But yeah, we got one shot, one kill. We got Purge and Revert model. We have multiple market maker buy and sell models here, just in this one little range. That's, and for the longest time, it was just below equilibrium of that price range that I pointed out earlier. Anyway, thanks for listening. Please like, comment, subscribe, and ask some questions, man. Tune in. We get out. Peace.